All right, guys, to all our Texas friends and those with all the winter storms, stay safe. They're having rolling blackouts, I know, in Texas. So make sure you guys stay as safe as possible. I just wanted to go over the reading the difference between a new move and a retracement. I'll be quick about it, go over in detail in our coaching session that we have at the top of the hour. But when you're looking at a chart, you just identify, and this is not hindsight, but it's already happened, and that is from this X here up to this X is considered a move. The market had a nice move at this point, 32 all the way up to 44. Now we had 45s as a big order, big iceberg order. They did about 4,500 contracts. They couldn't get through it. And once they started to leak lower, they really started to step on it. Now, when you start to retrace, and remember, this is a move right in here, MOVE. And the next retracement is just that, retracement. But the retracement could turn into a move when it retraces too much of this guy. So 50% is usually healthy enough where you don't stick enough people long. But once you start really taking out most of the move prior, this is no longer retracement, it becomes a new move. So in here, when you're about 80% taking this move out, you really have to take your horns off in this case and expect the downside to be the right side. And if you're going to get long, be very careful getting long, because you identified just this move versus retracement, which the retracement became really another move. And that's kind of where the highlight in today's session is, that to see this happen after that isn't a surprise. And that's how you start reading a chart. And I remember learning this about 20 years ago, just sliding over to one of the guys in the prop firm who was a more senior trader than me at the time. And he just had said, how strong is a market when it retraces almost 100% of its move? If it was strong, it would only at least come down to here and try to re-rally, or come down to here and try to re-rally. But at some point, you got to compare the move to the retracement to find the probability that, you know what, might be a little pullback and then they step on it again. And it's really, when you read a chart like that, you come in with a cleaner objectivity of B to B, what I call B to B moments, which is bullish to bearish or bearish to bullish. Those are important transitional moments that if you could look at simple things, you could stay more objective in a very subjective and emotional environment. Anytime you have an opinion, you just went from objective to subjective. Anytime you have an opinion with a trade attached to it, throw in some emotion. So you really need to know where that objective reset button is and keep pressing it when you have a position open, or when you're trying to find and create, a transition from bullish to bearish. And in this case, it would have been, bullish to bearish well before it fell back out of bed and made lower lows. Stay safe, especially those in the South. Keep yourself healthy. Comment, subscribe, and all that good stuff.